Welcome back to the Deep Dive. Today, we're going to be tackling a topic that might not be on everyone's radar, no, but it could actually be a game changer for your business, especially if you've hit a few roadblocks with that traditional financing. We're diving deep into the world of factoring, and you guys have sent over some really interesting articles, and luckily we have an expert here to help us kind of break it all down.
I'm excited to be here. Factoring often flies under the radar, but it can be a really powerful tool for businesses when they're facing certain financial challenges.
Okay, so before we kind of get into the weeds here, can we make sure everyone's on the same page? Factoring isn't exactly, something you hear at the dinner table every day.
Definitely. So imagine you're a manufacturer and you've just shipped out a huge order, right, worth, let's say, $100,000. Great. But then you realize your client, they don't have to pay you for another 60 days. That's a long time to wait for that cash, especially if you have, bills piling up right now. So that's where factoring comes in.
Okay, so you're basically selling that invoice to a third party, right? A factor at a discount to get the cash right away. That makes sense. But wouldn't you end up losing money by selling it at a discount?
That's a really valid concern. There's definitely a cost associated with factoring. It's important to weigh that cost against the benefits of having that immediate cash flow. It's all about finding the right solution for your specific situation.
One of the articles that you sent over focuses on a company called Versant Funding. And this guy, Chris Lehnes, who's a real advocate for factoring, he spent his whole career educating people about this type of financing. What's his story?
Well, Chris has a pretty interesting background. He's worked in banking, SBA, lending, and he even got caught in the layoffs during that 2008 financial crisis. Now he's with Versant Funding, and they specialize in what the article calls difficult deals. It seems like he really knows this stuff inside and out.
So what makes these deals difficult? Are they working with businesses that are already in financial trouble?
That's a great question, and it really gets to the heart of what Versant does. They're focused on helping businesses that may not have that stellar credit or a long track record, Maybe they're newer, or maybe they've had a few bumps in the road. Versant steps in and provides that short-term financing with the goal of helping those businesses get to a point where they can actually qualify for more traditional loans down the line. They're acting as that bridge.
So they're taking on more risk.
Yeah.
But their goal is to actually help these businesses graduate to better financing options.
Yeah.
That's a pretty unique approach.
It is, and it challenges the perception that all factoring companies are just out there to make a quick buck. Lehnes really emphasizes that Versant is about building those long-term relationships, not predatory practices.
Which is refreshing to hear because I think there are a lot of misconceptions about factoring.
Absolutely. And that's why educating people, especially, financial professionals, is so crucial. If a business owner's primary advisor doesn't understand factoring, they're not likely to suggest it as an option.
So having brokers and advisors who are well-versed in factoring can really open doors for these business owners who might not even know this exists as an option for them.
Exactly. It all goes back to financial literacy. The more we understand, all the tools in the toolbox, the better equipped we are to make, really informed decisions. And that's true whether you're running a business or managing your personal finances.
That's a great point. Now, I'm curious about Versant's approach to client selection. The article mentioned that they primarily work with U.S.-based businesses. Are there any other criteria that they look for?
Yes. They typically work with businesses that have domestic receivables, so meaning their invoices are coming from other U.S. companies. So if your clients are mostly overseas, you might not be a good fit. And they also tend to focus on companies with annual revenue between $5 million and $10 million. Although they've worked with a pretty diverse range of companies, from family-owned businesses to those backed by private equity. So they seem pretty comfortable working with a variety of structures.
It sounds like they have a solid understanding of the risks involved with factoring, but they're not afraid to think outside the box a bit.
Exactly. They're not shying away from those difficult deals that other lenders might avoid. They seem to have really carved out a niche for themselves in that space.
Okay, I'm starting to get a better picture of how Versant operates. But I'm curious what happens if the client doesn't end up paying the invoice. Where does the risk fall?
Oh, that's where things get really interesting. And it's something that a lot of people don't understand about factoring. There are actually two main types: recourse and non-recourse.
Okay, let's break those down a little bit because I admit I'm not entirely clear on the difference.
Sure. So with recourse factoring, if the client doesn't pay, the factor can actually come back to the business that sold them that invoice and demand their money back. So the risk ultimately remains with the business. But with non-recourse factoring, the factor actually takes on that risk of non-payment.
So in that case, the business gets their cash and they don't have to worry about chasing down the payment. But I'm guessing that non-recourse factoring probably comes at a higher cost up front.
You got it. It's a trade-off, right?
Yeah.
Non-recourse factoring can be a really valuable tool for businesses that want to completely eliminate that risk of non-payment. But it usually involves, a higher discount rate or additional fees.
That makes sense. It sounds like there are a lot of factors to consider when deciding if this is the right fit.
Absolutely. And it's not just a matter of choosing between recourse and non-recourse. There are variations within those categories, and different factors will have different terms and conditions.
So it's not as simple as just plugging numbers into a calculator. You really need to understand the nuances of that agreement and the risks involved.
Exactly. And that's where having a trusted advisor who understands factoring can be so valuable. They can help you navigate all the complexities of that process and make sure you're getting a deal that's truly in your best interest.
This is all starting to make a lot more sense. Now, I'm curious about the marketing side of things. How does a company like Versant reach potential clients? Are they running TV ads or billboards?
Actually, that's one of the things that stood out to me in the article. Versant takes a much more targeted approach to their marketing. They're not trying to reach everybody, just the right people.
So how are they doing that? Who are they targeting?
Well, instead of blasting their message out to the masses, they really focus on building relationships with people who are already advising businesses. So, bankers, attorneys, consultants, even coaches. They're tapping into these networks of trusted advisors who can actually identify businesses that might benefit from factoring.
That's smart. They're leveraging those existing relationships to reach their target audience.
It's a much more effective strategy, especially since most business owners aren't, out there actively searching for factoring solutions. They might not even know it's an option.
So by connecting with those intermediaries, Versant is getting their message in front of the people who are already having those critical conversations with business owners about their financial needs.
Exactly. And it goes back to that theme of education and awareness. Versant recognizes that, brokers and advisors play a key role in helping businesses understand the full spectrum of financing options that are available to them.
This is all really fascinating. And I already feel like I have a much better grasp of, what factoring is all about. But before we move on, is there anything else about Versant's approach that stood out to you in the article? Anything that surprised you?
One thing that really struck me was that Versant, despite being, quite well capitalized themselves, recognizes that the lending landscape is changing. They're predicting a potential shakeup as banks become more cautious with their lending.
That's interesting. Why do they think that's going to happen?
Well, we've seen some economic uncertainty lately, and when things get shaky, banks tend to tighten their lending criteria. They want to minimize their own risk. But this creates a challenge for businesses that really need funding, particularly those that might not fit that traditional lending mold.
So even a company like Versant, which seems to have a pretty strong foundation, is anticipating some potential challenges ahead. That's a little unsettling.
It is, but it also speaks to the interconnectedness of the financial system. What happens in one area can have ripple effects across the entire industry.
I'm starting to understand why understanding all these different financing options is so important. It's not just about knowing what's out there. It's about being prepared for whatever, the economic landscape throws at you.
That's a great way to put it. Being informed and adaptable is key to navigating the complexities of the financial world, especially, in times of uncertainty.
I completely agree. Now, before we dive into the potential implications of all this for you, the listener, let's take a quick break to gather our thoughts.
So you're saying if banks start pulling back, it could actually make it harder for factoring companies to get the funding they need to operate.
Exactly. It's like this domino effect,
Which could then make it even more challenging for businesses to get that financing when they need it the most.
And this is where it gets really interesting, because we're not just talking about a theoretical possibility here. The article actually quotes Lehnes, saying, I think you'll see a continued pullback of credit, which is going to create more defaults and delinquencies.
Wow, so he's pretty confident this is going to happen.
He seems to think it's inevitable, and it makes sense, right? If banks are nervous about the economy, they're going to be more selective about who they lend to.
Absolutely. They're going to prioritize their most secure clients, the ones with those impeccable credit histories and really rock-solid financials.
Which means that a lot of small and medium-sized businesses, the ones who might actually be struggling the most in a downturn, could find themselves completely shut out of those traditional lending options.
And that's where those alternative solutions like factoring become even more crucial.
It's like having a backup plan when the primary system starts to falter.
That's a great analogy. And it highlights why it's so important for business owners to be aware of, the full spectrum of financing options that are available to them. Don't just rely on what you've always done.
Right. Don't wait until you're in a crisis to start exploring those alternative avenues.
Exactly. Be proactive. Educate yourself about the different types of financing, talk to your advisors, and have a plan in place, in case you need to access that capital quickly.
Okay, so we've established that factoring can be a lifeline for businesses in certain situations. But I'm curious, does Versant work with all types of businesses? Or do they have a specific niche?
They do seem to have a sweet spot. They primarily work with U.S.-based businesses, specifically those with domestic receivables. So if you know your clients are mostly overseas, you might not be a good fit for them. And they tend to focus on companies that are generating between $5 million and $10 million in annual revenue.
So they're not necessarily targeting startups or those tiny mom and pop shops.
Right. It seems like their ideal client is a company that's established enough to have, a consistent flow of invoices, but not so large that they have those in-house financing options.
That makes sense.
Yeah.
And the article also mentions that they work with a variety of business structures. They've got privately held companies, family-owned businesses, even those that are backed by private equity.
It seems like they're pretty flexible in that regard, which is a good indicator that they have, the experience and the expertise to handle a wide range of situations.
That makes sense given their focus on difficult deals.
Yeah.
They're clearly not afraid to take on, a little bit of risk.
And that ties into another interesting point that Lehnes makes in the article. He talks about how some factoring companies actually shy away from businesses that have been through tough times, but Versant actually prefers those difficult deals.
That's right. And it goes back to their philosophy of being that bridge to more traditional financing. Mm-hmm. They're willing to work with businesses that have had some bumps in the road because they really believe in their potential.
It's almost like they see those challenges as an opportunity to help businesses get back on track and reach their full potential.
Which is a pretty amazing approach, considering they could easily just focus on those low-risk, high-reward deals.
It speaks to their commitment to truly helping these businesses succeed. They're not just in it for the quick profit, they're playing the long game. And that involves fostering the growth and development of their clients.
That's a really important point. They're not just providing a financial service, they're acting as a partner in their client's journey.
Exactly. And that's a key differentiator between Versant and some of those other factoring companies that might be more focused on those short-term gains.
Okay, so we've talked a lot about Versant's approach and their philosophy, but I'm curious, how do they actually find these businesses? Are they out there cold calling or sending out mass mailers?
Actually, their marketing strategy is quite interesting. They take a very targeted approach.
Oh, that's right. The article mentions something about that. Can you remind me what they do?
Well, instead of trying to reach everyone, they focus on building relationships with these key intermediaries who are already working with businesses. So we're talking about, bankers, attorneys, consultants, coaches, even accountants.
So people who are already advising small businesses and have that trusted relationship, that's really smart.
It is. And it makes a lot of sense when you think about it. Factoring is not something that most business owners are, actively searching for. They might not even know it exists as an option.
Exactly. So it's much more effective to connect with, those who are already having conversations with business owners about their financial needs.
It's about leveraging those existing networks and tapping into the expertise of those who have, a deep understanding of that small business landscape.
And it plays into Lehnes' own approach to business development. The article mentions that he has this massive network of referral sources. He's not about closing, dozens of deals every month. It's about cultivating those long-term relationships that can generate, a steady stream of those qualified leads over time.
It's a very strategic approach, and it aligns perfectly with Versant's focus on building, those long-term partnerships with both their clients and their referral sources. It's not about churning through deals. It's about finding the right fit and creating a win-win situation for everyone involved.
And that long-term vision is also reflected in Versant's expectations for their client relationships. They're very upfront about the fact that they're often a bridge to something more permanent.
That's a really important point. They're not trying to lock businesses into these long-term factoring agreements. The goal is to help them become financially healthy enough to eventually graduate to more traditional forms of financing.
Which is a pretty amazing approach, considering they could easily just keep those businesses on the hook indefinitely.
It speaks to their commitment to truly helping these businesses succeed. They're not just providing a financial service, they're acting as a partner in, their clients' growth and development.
Okay, so we've established that Versant is all about building those long-term relationships and helping their clients succeed. But I'm curious, are there any downsides to factoring? Are there any risks that businesses should be aware of?
That's a great question. And it's important to be, realistic about both the benefits and the potential drawbacks of factoring.
So let's get into the nitty-gritty.
Yeah.
What are some of the things that businesses should be wary of?
Well, one of the most obvious drawbacks is the cost. Factoring can be expensive, especially if you're dealing with, a less reputable company.
Can you give me an example? What kind of costs are we talking about here?
Typically, you'll pay a discount rate, which is a percentage of that invoice value. This can range from 1% to 5% or even higher, depending on, the factors that we discussed earlier, like the creditworthiness of your clients and the terms of the agreement.
Okay, so if you have a $10,000 invoice and the discount rate is 3%, you're giving up $300 right off the bat.
Exactly. And that's just the discount rate. There might also be, additional fees like application fees, processing fees, or even hidden fees that are buried in the fine print.
That's a good point. It's really important to read that agreement carefully and make sure you understand all the costs involved before you sign on that dotted line.
Absolutely. And don't be afraid to ask questions. That a reputable factoring company should be transparent about their fees and willing to explain everything in detail.
So cost is definitely a factor to consider. But are there any other potential downsides or risks associated with factoring?
Yes, there are a few other things to keep in mind. One potential concern is the impact on your client relationships.
How so?
Well, with some factoring arrangements, the factor will actually take over that collections process. This means that they'll be the ones contacting your clients to collect payment.
And that could potentially create some friction if the factor's approach is more aggressive than yours.
Exactly. It's important to choose a factor that aligns with your values and has a similar approach to, customer service. You don't want to damage your hard-earned relationships with your clients.
That's a really good point. It's not just about the money. It's about protecting your reputation and maintaining those positive relationships.
Absolutely. And another potential downside is, the potential for scams or predatory practices.
Oh, wow. Can you elaborate on that a little bit? What should businesses be looking out for?
Unfortunately, there are some unscrupulous companies out there that prey on businesses that are desperate for funding. They might promise, unrealistically low rates or easy approval, but they often have those hidden fees or really unfair terms.
So how can businesses protect themselves from these predatory practices?
The key is to do your research. Check out the factor's reputation. Look for online reviews and see if they're registered with, any industry organizations. And again, don't be afraid to ask questions and get everything in writing.
That's great advice.
Yeah.
It sounds like knowledge is really power when it comes to navigating the world of factoring.
It absolutely is. The more informed you are, the better decisions you'll make. And the better equipped you'll be to protect yourself from, those who might try to take advantage of your situation.
Okay, so we've talked about the pros and cons of factoring.
Yeah.
But I'm curious, how does it stack up against other financing options? Is it always the best choice?
That's a great question. And the answer, as with most things in finance, is it depends. Factoring is not a silver bullet. It's just one tool, in the toolbox.
So how do you know when it's the right tool to use?
Well, as we've discussed, factoring can be a good option for businesses that have, those strong invoices, but might not qualify for that traditional financing. Can also be a really useful tool for, bridging a cash flow gap or managing those seasonal fluctuations.
But it's not always the best choice.
Right. If you have good credit and a solid track record, a traditional bank loan might offer, lower rates and more favorable terms.
Yeah.
Or if you're looking for long-term financing, a line of credit might be a better fit.
So it really comes down to evaluating your specific needs and circumstances and choosing the financing option that best aligns with your goals.
Exactly. There's no one-size-fits-all solution. It's all about finding the right fit for your unique situation.
This has been incredibly insightful. I feel like I've learned so much about factoring in such a short amount of time.
Me too. It's fascinating to delve into a topic that often flies under the radar.
Absolutely. Now, before we wrap up this deep dive, I want to shift gears a bit and talk about the broader implications of all this for you, the listener. We've discussed how factoring can be, a valuable tool for businesses. But what about the individual investor? How might these trends impact their investment decisions?
That's a fantastic question, and it's one that we haven't really explored yet.
Exactly. So for all those investors out there listening, I encourage you to consider the potential implications of these shifts in the lending landscape. How might the rise of alternative financing impact the companies you invest in?
That's a great question for investors to consider. Are there opportunities to invest in companies that are providing these alternative financing solutions? Or are there risks associated with companies that are, heavily reliant on those traditional lending sources?
It's all about staying informed and being adaptable. The financial world is in a state of flux, and those who are able to navigate these changes effectively will be the ones who come out ahead.
Absolutely. Knowledge is power, and that's especially true in the world of finance.
And on that note, we'll wrap up our deep dive for today. Thanks for joining us. We hope you found this exploration of factoring informative and thought-provoking.
And remember, keep asking those deep dive questions. There's always more to learn and explore.
Okay, so we've covered a lot of ground on factoring today. We explored the ins and outs, the pros and cons, and even touched on how, this whole landscape is shifting.
Yeah, it's been a deep dive in the truest sense of the word.
But before we wrap up, I want to make sure we bring this all back to you, the listener. We've talked about how factoring can be this valuable tool for businesses, but how can this knowledge help you actually make better financial decisions?
That's the key, right? Turning information into action.
Exactly. So let's say you're a small business owner, listening to this, maybe you've been turned down for a bank loan or you're just struggling to manage your cash flow. What are some key takeaways that you should keep in mind?
First and foremost, don't panic. Just because traditional financing isn't working out doesn't mean you're completely out of options. Factoring might be a solution, but it's really crucial to do your research.
So don't jump into anything blindly.
Yeah.
Take your time to understand how factoring works, compare different companies, and make sure you're getting a deal that, really aligns with your needs.
That's great advice. And I would add, don't be afraid to ask questions. A reputable factoring company should be transparent and willing to explain everything in detail.
Right. If something feels off or you're not comfortable with the terms, just walk away.
Yeah, it's your business and, your financial well-being is on the line. You have the right to be selective.
Okay, so we've talked about, what to do if you're considering factoring. But what if you're on the other side of the equation? What if you're an investor?
Oh, that's an interesting angle. How might these trends in alternative financing impact their investment decisions?
Exactly. It's something we haven't really touched on yet. Are there opportunities to invest in companies like Versant who are providing these factoring services? Or are there risks associated with companies that are, maybe too reliant on traditional lending sources?
That's a really thought-provoking question, and it highlights how, interconnected the financial world truly is. Shifts in one area can create opportunities and challenges in others.
As an investor, it's crucial to stay informed about these trends. Do your research, talk to your financial advisor, and make sure your investment strategy is adaptable enough to navigate these, changing times.
Absolutely. Flexibility and a willingness to learn are really key to success in any market.
Well, I think that's a great place to wrap up our deep dive into the world of factoring. We hope you found this episode informative and maybe even a little bit inspiring.
It's been a pleasure joining you on this journey of discovery.
And remember, the financial world is constantly evolving. So keep exploring, keep asking questions, and keep diving deep into the topics that matter most to you.
Until next time, keep learning and keep thriving.
That's it for our deep dive today. Thanks for joining us.